Welcome back to the channel, everybody, and what an interesting day we've had. Quite a bullish day across the board. Stay with us right till the end. We'll be performing technical analysis on all the most important charts today, giving you our price projections and where we think things could go next. And at the end of the video, I'll give you how I'm personally positioned going forward. Okay, so we had Fed Chair Jay Powell talk at 12:30 Eastern Standard Time today, and he initially reiterated that disinflationary process has begun. It's on track, things are looking good, and the market loved that rally. However, then he also stated if jobs market keeps getting stronger, and if inflation does bounce back, he will raise rates more than what the market is expecting. And then the market sold off. However, it found support down at 407, and then we rallied up to new highs on the day and finished pretty good. But we'll come back to the SPY at the end of this video. First, we'll just take a look at all the other markets to form our opinion. So NASDAQ was the winner today. Tech and really strong price action. You can see we're speculating this could be an island reversal. We've got a lot of bearish seasonality this week, and we've ticked down with two lower lows and lower high days. However, really strong day today on above average volume. So this is really bullish price action, and as always, we always follow prices first and fundamentals follow second. Looking on across the board internationally, we can see international did well. A lot of global equity breadth out there today, with Japan actually the winner, up 1.4%. And China just floating back with its 50 bar VWAP. Other than that, all the other internationals, we've got Canada sitting up above its 50 bar and towards the top of its range. We've got United Kingdom actually doing really well as well. Australia doing well, and so on and so forth. Over to volatility. Volatility came off hard today, as you'd expect with a big up day like this. And we've had put call ratio, still not many people buying hedges, and this is normally a contrarian indicator. But today we've seen like the growth cyclical high beta trades doing well and holding up here. So this parabolic uptrend may not be over yet. If you've been watching the channel, I did say that it's too early to say whether that was a top. We hadn't had confirmation of a reversal, and today looks like this may not be a top. We may still be walking the line at the top of the buy-sell band here. Same with high beta versus low volatility, growth versus value, tech versus industrials. But what has come off is small caps. Small caps does look to have made a little short-term top of the range and turn. And the yield curve managed to bounce today after being deeply oversold yesterday. And we have had the 10-year climb up. So I'll just talk a little bit about the bond market and what's been going on, and how there's a bit of conflicting signals out there as it relates to the equity market. So what's really been helping the equity market so far this year is the narrative of disinflation is really under control, and the market pricing in a recession, and the market kind of pushing the Fed to even pause rates, slow down rates, or even pivot and go towards dovish and even cut rates later this year. And so that's helped. The stock market loves lower rates, so that's obviously helped the SPY go higher as we've had that narrative play out. However, if you remember last Thursday, we had a really strong jobs report come through, and that sent yields sharply higher, and we bounced off this critical support zone on the US 10-year yield. So, and if we look out to what's happened to the June Fed funds, they've jumped as well. And June's actually pricing in 5.09%, okay? And December, although still a little low at 4.89. So what's happened in the last couple of days is the bond market, which is typically more of a leading market than equities, as it's more sophisticated, larger and more informed, sophisticated traders as compared to equity, which has a lot more retail, unsophisticated traders. So the bond market is saying, because the market wasn't agreeing with the Fed, the market was saying, no, you're going to have to cut rates this year, and Jay Powell's saying, no, we're going to keep the foot on the gas, we need to get above 5, really get on top of inflation. The market it looks like it has started agreeing with the Fed, with Jay Powell, saying, well, maybe you're right. The jobs market, we added 500,000 new jobs versus 188,000 expected. The jobs market's really strong. There's potential for inflation to, tick up. It's not just going to be a linear line straight down. And the June Fed fund rates is in a strong uptrend. I mean, on every time frame, if you look on, we'll just turn our trend candles indicator on, that's bullish on the short-term daily, that's bullish on the medium-term 3-day, and that's bullish on the weekly. This is a very bullish-looking chart here. You can see we've uptrended. Now we've been consolidating since November, and now we're coming up to test the top of the zone. So this will be a critical. If this breaks out, that is very bearish for stock market, because then there's higher interest rates to be had in the safety of treasury bonds and other investment grade bonds. So the yield differential between bond and equity market will increase, and there'll need to be lower equity prices to justify the risk-free rate you can get in bonds. So this is very critical level coming up here in the bond market, and it's surprising to see equities up this strong in the face of that. So that's the big conflicting thing I was talking about. We've got the bond market saying, well, Jay Powell is right. We are going to have to increase rates above 5%. Even June Fed fund futures are implying that they're already above 5%. But the stock market's rallying really well into this high growth, high beta thing. So as always, prices lead, fundamentals follow. So I always will side with price action first. And we've just had such a strong price action day today, especially in tech, and that above average volume. So, but I'll get back to more to this in the end of the video and how it affects my personal positioning. So let's just keep going through the charts after we've talked about bonds. We have had high yield hold as well, above its 50 bar. And that did better than treasuries and investment grade today. So that was good for risk on equity sentiment. Dollar was flat, as was euro. Dollar came off a bit against the yen though. Bitcoin is actually holding on up here, forming a bit of a box formation. So is this consolidation continuing on trend, or are we going to pull back? It's going to be tied in with the NASDAQ, and this is kind of mimicking meme stocks, which we've had that relationship for a while now, crypto and meme stocks. So, and this is mimicking the high beta growth trade we've had since the start of this year as well. So it's all kind of linked together, this risk on sentiment. Commodities, you've been watching, we saw yesterday we put in a hammer formation on this support zone, and we've held some pretty good price action today in the commodity space. Finished up near the highs. This looks like a solid, clean, bullish reversal candlestick formation. Same with Dr. Copper. Gold's just kind of sitting here flat. We've had this big gap down on Friday on volume. So we'll really have to hold this level for gold to hold this uptrend. Otherwise, this might have broken this uptrend, because we are below the 50 bar VWAP here as well. Same with silver. Oil had a really strong day, up 3.4% above average volume. And natural gas. If you've been watching the channel, we're playing a long trade here, and we had a good day today, up 4.35%. So we're watching this and looking for this to finally make a bottom, technical bottom, and bounce. Uranium bounced back after it's had a 3-day pullback. And now over to the sectors. So let's just have a quick look overall. We did have the defenses off a little bit, and retail, real estate, clean energy. The winners today were energy, obviously with oil up, really good, and tech and semis. So energy and tech. And what else did well is kind of sneaking up here is financials. If you look at this, we had this bit of overhead resistance here in the financial sector. It's been bouncing off. It's not going to bounce off forever. It's broken through that, just kind of sneaking up there. If we go over JP Morgan, look at that. It's kind of just this is when it had its earnings, big bullish engulfing, and it's kind of just consolidated. It's kind of just sneaking higher up here. So that's interesting on the financials. I'd say that's to do with rates as well. Because the banks like higher rates, they can make bigger margins. So that was interesting on financials. Real estate's holding up here. And technology's holding. And tech, that's really strong price action. This could be walking the line. This parabolic trend could go for another week or two. No problems at all. Over to stocks. BlackRock just sitting there. Mega cap tech did well today except for Amazon. Look at the price action on Apple. That's really strong. That's a bullish engulfing pattern right there. And Microsoft up 4.2%. It's just broken out to new highs for the last, going back to September. So that's a 4-month new high on Microsoft on strong volume as well. Amazon is struggling a bit, but did form a hammer formation on above average volume. So this could be holding here. And Google, similar to Microsoft, 4.6% on strong volume, although it didn't quite break. Yeah, actually, it did break out just by a few ticks. Meta did well, and the semis strong. Nvidia strong, breaking out new highs again, above average volume. Tesla strong, forming a little triangle formation here, coiling up. This could break. I wouldn't be surprised to see this above 200 tomorrow or later this week. Meme stocks reversed the trend of yesterday. If you remember yesterday, the market was down. We had meme stocks up. Today the market was up. Meme stocks is down, and pretty bad too. If you watched yesterday, you saw me say in my video, this AO thing's overcooked. Where it's going to come off hard. I could almost guarantee it, and it's already started today. It's off over 10%. So I would definitely not be buying this up here. Beyond Meat off. Bed Bath & Beyond. Unfortunately, they've done a secondary offering, which means they're selling more stock to raise capital to stay alive. Whenever you have these, beaten hard down stocks, anytime they get a good pop, they're going to sell more stock. They're going to take advantage of that to try and raise capital and stay alive. So unfortunately, that would have hurt a lot of meme stock buyers today. And with that, it's probably spilled over. AMC down 9%, GameStop down 11% as well. Although we did have Bitcoin hold up. So the meme stocks were off hard today. Okay, so now that we've looked at all that, let's go back and talk about the market, SP500, and how I'm positioned going forward. So if you watched yesterday, I was positioned 100% net short. That's what I came in today. And surprisingly, I managed to finish the day up due to some good stock shorts selections. However, I have changed my portfolio from 100% net short to market neutral. Equal amount of longs and shorts. That just on the back of today's price action. Now, why I was net short is we did have a bit of a bearish reversal formation, bearish seasonality. And why I haven't gone tilted bullish yet is because of what I've been talking about with the bonds, the bond market, and how that's just repricing. And this to me is really bearish, negative for stocks, especially if we come up here. And just the price action in this as well is really, there's really bullish price action in this. So, what happens if we get to 5.5? The market's going to freak out. Stock market's going to have a panic attack if we go to 5.5 on June implied Fed fund rate. So that to me is got a lot of momentum in it. We are stretched in this high beta thing, but it is walking the line in this parabolic trend. So I will attempt again to get short it, but I won't stay short for long if I'm wrong. I will not fight the market for long if I'm wrong, which I had to today. And put call ratio low as well. That's contrarian to me as well. However, I did manage to find some long setups today to tilt the portfolio market neutral, and just this really strong price action on NASDAQ. And after hearing Jay Powell, Jay Powell's trying to, he had a chance to talk down the market today and he didn't. He kind of supported it by saying, he wants to pat himself on the back for getting inflation under control, basically. He's selling disinflation. Everyone talks their book, and his book is disinflation. He wants inflation down. But, I mean, if inflation ticks back up, this job market's really strong. And, the bonds lead better than equities, and the June bonds, Fed funds already above 5%. So I can imagine when we do turn, when the market comes to that realization, it could turn hard. But for now, prices lead, fundamentals follow. I can't fight this strong bullish uptrend. So I will remain market neutral until further notice. Thanks for tuning in and watching till the end. I appreciate all you guys hitting the like and subscribe button. And I hope to see you again tomorrow. We'll talk about tomorrow's price action. Thanks very much and take care out there.